Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. Oil and gas prices were trading for around $70 per barrel, at least until early January, which is when the outgoing Biden administration levied big sanctions on Russian oil and gas. Since then, the West Texas Intermediate is trading at its highest level in 4 years at around $80 per barrel. Brent crude has followed a similar trajectory and it's trading around $82 per barrel. Higher oil and gas prices have juiced up oil freight prices too, with derivatives trading at highest level in a decade. Earnings on the Middle East to China route and industry benchmark surged more than 22,000 in 2 sessions since the sanctions were announced to almost $50,000 per day. Before the sanctions were announced, lower oil prices and shipping rates are what was holding the shares of today's income pick, Cool Company Ltd, down. They're traded on New York Stock Exchange under symbol CLCO. That and those issues leading to the shipping company cutting its dividend. John, tell us what's happening here.
Well, yeah, just briefly, the sanctions, which are expected to be supported by President Trump, are now doing the opposite and helping juice Cool Company stock. But while CLCO stock is down 20% over the last 3 months, at least at this recording, it's up 10% or so since the start of 2025.
And those gains could be just the beginning. Cool Company shares are, as of this recording, trading at around $8.70 per share, with Wall Street analysts providing a 12-month share price forecast of about $13.50. Should it hit that level, it could put CLCO shares well above its May 2024 record intraday high of $12.55. Now, John, let's talk a little bit about what Cool Company is all about.
Yeah, Cool Company Limited is a pure play liquefied natural gas or LNG shipping company. Global demand for LNG is expected to rise by more than, I think it's 50% by 2040, as industrial companies in places like China and South Asia and Southeast Asian switch from coal to gas to support their economic growth. Now in 2023, global trade for LNG hit, I think it was 404 million tons, and that's up from 397 million tons the year before. We don't have 2024 data yet. The U.S. is the world's largest exporter of LNG, which means key markets in Asia and the Far East have to pay more to have that production shipped further distances on a growing number of vessels. Cool Company's fleet consists of 15 LNG vessels and floating storage regasification units, or FSRUs, that operate under short and long-term charters with major energy companies and utilities.
It reported higher daily time charter rates in the third quarter of 2024.
Yeah, for the third quarter ended September 30th, Cool Company announced revenue of $82.4 million. Net income was $8.1 million. And that was down significantly from $26.5 million in the second quarter. Big drop was mainly a result of a loss in mark-to-market interest rate swaps. On the plus side, time charter equivalent rates rose 4% to $81,600 per day. That was boosted in part by one vessel charging a higher charter rate. Now, contracted backlog at the end of the quarter, which is important, $1.1 billion. This provides the company with just not predictable revenue, but also bodes well for its dividend. Now, subsequent to the end of the third quarter, it obtained bank approval for a refinancing of its $570 million bank facility into a reducing revolving credit facility, which will provide it approximately, I think it's $120 million in additional borrowing capacity.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for our free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. And John, I see that this company announced a third quarter dividend of 15 cents per share.
Yeah, Cool Company only went public in March of 2023, was being spun off from Golar LNG Limited in early 2022. So as a result, it doesn't exactly have a long history of providing investors with a growing dividend or even providing a long history period. Cool Company also has a variable dividend. Now, this simply means that its payout could change from quarter to quarter. As a result, it's not the kind of company you can just pick and stick in your portfolio and forget about. So because of industry dynamics, which included a lower third quarter profitability, it had to lower its dividend payout. I think 15 cents per share is noted. And that works out to $1.64 per share for a forward dividend yield of 15.41%. Now, shareholders punished CLCO stock by sending it significantly lower, but it has rebounded since the start of 2025, and the outlook remains pretty solid for both CLCO stock and its dividend. Now, in addition to a strong balance sheet, cash flow has picked up from $2.4 million in 2023 to $77.8 million over the last 12 months. Now, this coupled with higher oil prices and stronger freight rates should allow the company to raise its dividend in 2025.
John, thank you so much for your insights. Just to recap, Cool Company Ltd is a pure play LNG shipping company that had a fleet utilization of 98% in the third quarter of 2024. While it reported solid third quarter revenue and TCE rates, it reported significantly low net income, which negatively impacted its dividend. Though, because of its strong balance sheet, growing fleet, and industry tailwinds, the company's board could raise the distribution over the coming quarters. While the company clearly wants to perform well for its shareholders, insiders have a big interest too, with 58.4% of all shares. On top of that, 65 institutions have a 23.1% stake in Cool Company. Some of well-known institutional holders include Morgan Stanley, Bank of America Corporation, and HSBC Holdings PLC. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.